Well, there are some new signs that the economy remains on solid footing. Mortgage rates have plunged to their lowest level in over a year. Now, these are still high, but the average 30-year fixed rate mortgage has dropped to 6.47%. Compare that to a year ago when it was 6.96. And the average 15-year fixed rate is now 5.63. That is down from 6.34 a year ago. And housing experts say the decline gives prospective homebuyers some new purchasing power in what has been a seller's housing market. All this comes as better than expected jobless claims are easing some fears of a possible recession. So joining me now, an expert in analyzing the U.S. housing market, Mr. Lance Lambert, co-founder and editor-in-chief of Resi Club. Lance, so great to see you. So we saw the numbers there on this intro. How big of a deal is this rate drop? I mean, 6.47% down from 6.73% may not seem like a lot, but how much of a difference can that make on a 30-year loan?
Yeah, so when you start to come down for mortgage rates, every 50 basis points, half a percentage point like that, that's going to matter for buyers. It's going to give them a little bit more purchasing power. But at the end of the day, taking into account home prices, mortgage rates, and incomes and the incomes right there have not kept up with the mortgage rates and home prices. When taking all of those into account, this is around the worst housing affordability in almost 4 decades. And so even with a little bit of affordability improvement from mortgage rates coming down a bit, it hasn't given buyers that much, given how much they've just seen affordability deteriorate over the past 2 to 3 years. And so if you look at mortgage applications, you're not seeing a big jump up despite mortgage rates having come down for the past few weeks. And right now we are in the seasonally weaker period of the year. And there's a bit of a stalemate in a lot of markets where, yeah, if you look at months of supply, it's not very high, but it's inching up and buyers are getting a little bit more leverage. And there are markets around the Gulf, New Orleans, Austin, Punta Gorda, Cape Coral, they're in full-blown corrections. They're actually seeing prices come down a bit. But there are some pockets of the Northeast and Midwest where there's just not much active inventory and sellers do retain that edge despite mortgage rates still being where they are today.
Yeah, I don't think that's the news buyers want to hear in those areas. Lance, so we saw at the top of this also 6.9%. That's what it was a year ago for a fixed rate mortgage. What is likely behind this drop? Do you think we'll see it drop even more? Because I'm thinking, in less than 90 days, there is this election coming up. Are we going to see mortgage rates respond?
Yeah, I think the biggest thing driving mortgage rates down a little bit like we've seen over the past year is a little bit less volatility in financial markets because we've already went through the rate shock. We've seen inflation decelerate. It's not come down. Prices haven't come down, but they're not going up as fast as they were during the post-pandemic boom. And the other thing is you're starting to see the unemployment rate, while it's not high, it's starting to tick up. And so that's slightly increasing recession odds and also increasing the odds of the Fed starting to cut rates. And so mortgage rates aren't like short-term interest rates the Fed cuts. They're long-term rates in the economy. And they can go ahead and get ahead and price in several Fed rate cuts. And that's what they've already done. So mortgage rates have come down in anticipation of future Fed cuts.
All right, my last question for you, Lance. What is your advice to many millennials, to many in Gen Z who just feel like they will never be able to afford a home?
Yeah, I think the big thing to know is to understand your market. All of these markets vary so much across the country. Some of these markets, in the Northeast and Midwest, especially deep in the exurbs, are still very tight. And buyers are not having much leverage, right? And prices are still moving up. But there are some of these pockets where inventory is starting to move up quickly. And buyers, in the next 6 months might have more of an advantage, even if rates do come down a bit, given the jump in inventory. And so the advice I would give is go read Resi Club. It's, my site where I track these housing markets all across the country, 800 metros, 3,000 counties, and find out what's going on with prices, what's going on in inventory. Because at the end of the day right now, it's not a seller's market everywhere. Some of these places are in the middle, and some of them are slipping into buyer's markets. And so I think keep an eye on the numbers in your market.
Makes sense. All right, Lance Lambert, thank you so much. Thanks for watching. Go to joinnn.com to find News Nation on your screen. And don't forget to click the red subscribe button below to get more of News Nation's fact-driven, unbiased coverage.